I'm I've got to I'm actually with FFL Cornerstone, and actually I have my insurance license for a few years, and so yeah, so I'm not I wouldn't say that I'm the number one sales guy out there by any means, but I am pretty consistent. So hopefully you guys get something out of this. I know that in my experience, whenever you're actually learning from somebody, write this down if you're taking notes. We can get you about 70% of the way with about 70% consensus. And then that last 30% is going to happen by actually doing it in the trenches. Okay. So what I mean by that is that by jumping on this in-home clinic on a regular basis and any of the other trainings and hearing other top producers, you're going to end up getting bits and pieces from everybody's different style that ultimately you're going to piece together to make your own. And it's amazing. It kind of works like a tumbler on a lock, where you might have like 5 codes in a lock, and you need a 6th one in order to get that lock to unlock. And then all of a sudden, boom, the door of momentum just swings open for you. And now you got it. Like, you're locked in, you're loaded, and you're ready to roll. And so I remember that day for me where, I was selling insurance. I was in the home. I was doing pretty well, but I just felt like I hadn't quite caught my stride yet, my traction. And I remember actually I was doing a ride along with All Things with Stephen Yee. Now, you don't need to do a ride along to do that. It was really just getting an opportunity to see Stephen Yee's in home at the time. And he just had a couple of techniques and a certain posture and a way that he approached it that really resonated with me. And boom, it clicked. I got it. And then from there, I was able to go on and be a 20 to 40K producer. Right. So, but I have consistently been a 20K producer for the last couple of years. But so let's jump into it. So there's really 2 different angles that you're going to use when you go into the home. Okay. You're going to have a final expense presentation, and you're going to have a mortgage protection presentation. Okay. Ultimately, at the end of the day, we're pretty much using the same suite of products. It's just how we set it up. Okay. So I do a lot of mortgage. So I'm going to start with that, and, just talk about what it looks like when you're actually sitting down to do the in-home. Okay. So, let's say you get to the house, or it could be virtual or whatever, the way that I do my presentation is pretty much the same, but, you basically tee it up. You knock on the door, and, they answer the door, and you're like, "Hey, Tom, I had an appointment at 2:00. I'm your field underwriter for your mortgage protection file." Yeah. Okay, great. Should shoes off or on, right? Don't even give them an opportunity to port you at the door. And then the first thing I do when I'm walking in, like I'm owning the place, is I'm looking for that kitchen table. I'm like, "Great. Where's your kitchen table at?" Even if they try to point me at the couch, you don't do business on the couch. You do business at a kitchen table. So now occasionally there may not be a kitchen table or something, right? But not very often. So I'll intentionally walk over to the kitchen table. That's where we're going to set up. And then I'll, let's say Tom answers the door. The first thing I'm going to do is make sure that I'm not messing with a one-legger. So, if I don't see Mary, the wife, right then and there, then I'm going to bring something up in that case where, "Hey, where's the missus?" And if he says, "Oh, you know what? She had to go work or something. It's just me today." I will end the appointment right there. That's point number 1. Don't ever do a one-legger. That's the dumbest thing you could ever do, because you're going to get to the end of the presentation. They're going to tell you, "We got to think about it every single time," or "I got to talk to my spouse every single time." So both decision makers must be present, period. Just don't waste it. So I'll say in that moment, this is a great way to save face. So whether it's on the phone or whether I'm in front of somebody, I'll say, "Hey, unfortunately, I'll get in trouble if I don't meet with both homeowners. So we need to reschedule to when you guys are both home. So when can we do that?" And if they try to fight me on it, then, it is what it is. I'd rather lose the appointment than sit it. Don't ever, ever, ever let somebody posture up on you and get you to actually convince you to do a presentation with a one-legged appointment. It's not going to end well. Okay. But as long as both people are there, we've set the stage. We're now at the table, right? We're at the kitchen table. I've set up. My setup's pretty simple. I'm going to have my iPad Pro. That's my tech of choice. I would encourage anybody on here to invest in that. If you're wondering what to take into the home, iPad Pro with the Magic Keyboard is the way to go, in my opinion. If you have a laptop or another iPad, or you're not a Mac person, you're in the Stone Age. I'm a Mac guy, so I'm going to, obviously give you heck a little bit about it. But if you're on a PC or something like that, that's fine. Whatever you got for your technology. And then, basically, the next thing I'm going to say is if it's a virtual appointment, I'll say, hey, did you get the copy of my insurance license? Or if I'm in the home, I'll actually pull out a copy, an actual laminated copy of my insurance license. Say, first off, just to show you guys, this is my insurance, this is my license for the state. Just so you know, I'm licensed by the State Department of Insurance. Here's my insurance number, my license number, and my national producer's number, and whatnot, just so that you have that for your records. You can take a picture of that or write it down, whatever you want. And I'm doing that for instant credibility, right? So that way I'm, bridge that gap. I don't spend a lot of time on that. I wouldn't overqualify, right? You don't have a plumber that walks through the door and starts telling you about who they apprenticed with and how they represent this company. And we've been in business 50 years. That would be weird, right? It's like, listen, you already have credibility. I let you in my home. I booked this with you. Clearly, I think that clearly you've convinced me that you know what you're doing because you're in my home, right? So people that are guilty, I've found in life, or people that don't really have a lot of belief in themselves, or they have a certain insecurity, feel like they need to actually qualify themselves. So a lot of new agents I've found, that's one of the biggest mistakes they make when they're setting up the in-home, is that they're just not strong in their posture. They just don't have enough belief in themselves. And prospects, your clients are like, they're like sharks in the water. They can smell blood. Don't do that. They're going to mirror match you, right? So if you walk in like you own the place, and you're a professional and you just have that posture, they're going to mirror match that, and they're going to feed off of your confidence. Okay. So just in your body language and in your language is going to be able to build that rapport. But I do that just for a little bit of credibility there on that, but I don't spend really any more time on that. Because again, it would be weird if that plumber starts selling you about where they did trades and all that. Could you imagine that? Right. They sell you like, I get it. Just go fix my pipes. Right. So, but as we, set up, then the first thing I'm going to pull out is your financial inventory sheet. I would encourage you to, reference back to your training, reference back to your mentor, whoever you're working with on your financial inventory. There's really two different types of financial inventory sheets. There's a mortgage and there's a final expense. They're basically the same. They just ask for a little bit more information about the mortgage when you're dealing with mortgages. Since this is a mortgage appointment, that's what we're going to start with. So I'll sit down. 1 second. I had to let Steven know that I was on here. Okay. So, but anyway, so when we sit down, I pull out that financial inventory sheet, and this is how I started. Okay. So let's say I got Tom and Mary. So I said, okay, listen, Tom and Mary, like I said on the phone, I'm just, I'm your underwriter. I'm assigned to your file. My job is really just to figure out what you guys qualify for. But before we jump into that, just a couple of things about mortgage protection, just so that we're nice and clear here and that there's no confusion. I want you to remember the 3 P's of mortgage protection. Okay. Number 1, your mortgage protection is going to be private, meaning that it's a separate bill set up between you and a third-party mortgage protection insurance carrier. It is not something that's wrapped up in your monthly mortgage payment or forced on you. It is a coverage that you have full control over. If you want the coverage, you can have it. If you don't want it, you don't have to have it. Okay. So that's number 1. Number 2 is that it is going to be personal, meaning attached to you and Mary instead of the specific loan or the house. And the reason why that is key is because most loans in America actually end up getting sold on the back end. So the nice thing is that if a new lender shows up to the picture, you have the peace of mind of knowing that your mortgage protection isn't messed with because it's separate from day one. Okay. That also makes it very portable for you in the future. So let's say later on down the road, you ever wanted to refinance this loan, or let's say you wanted to sell the house altogether. Once you have coverages like this in place, they can go with you. They're portable into any loan or home that you're in. Does that make sense? Yes. Now, let me stop right there. Why am I doing that? Guys, write this down. I don't believe you can overcome objections. I only believe you can prevent them. I don't know if anybody else has ever said that. I know I have, so I take credit for that. That's what I found in my career, is that you cannot overcome objections, but you can only prevent them. Okay. Now, there's several things of why I do my little 3 Ps. Why am I bringing that up? Just so you guys know, because sometimes there is some confusion on mortgage protection when you're sitting down in front of them. Like, isn't this, just life insurance, or, are you working with my lender? Like, there's always like a couple of common confusions or objections that I've had after sitting through, thousands of these appointments. And I just found that by setting the stage with that, I actually answer any questions that would have come up, and I've prevented any of those objections, right? And so, because a lot of them are thinking, hey, it's old mortgage protection, right? And I'll even say that sometimes where I'm like, hey, this isn't like the old days where you called your lender up and you just added an extra fee to your monthly payment. And if you croak, it takes care of the house. The industry doesn't work that way anymore. 30, 40 years ago, they didn't sell loans on the back end like they did today. So my 3 Ps of mortgage protection, when I set the stage, it literally takes me like a couple minutes to do that. I found has prevented all of those objections and has gotten them on the same page and like, oh, okay, makes sense. And so anyway, boom, back into my presentation. So I'll say at that point, hey, does that make sense? They're like, yeah, okay, great. Well, listen, what my job is as your assigned underwriters, I'm just going to spend a few minutes to get to know you and Mary. And based on that information, I'm going to be able to figure out which one of the 20 A-rated carriers we work with to match you up with. And then basically what I'm going to do from there is I'm going to come up with some different programs and options. And some of these programs will have some different features and maybe some different prices. And what we're going to do is we're going to figure out which one matches you the best. Okay. And if we find one that checks all the boxes for you guys, most importantly, it fits the budget, and I think it's one that you can qualify for, then we're going to submit an e-application direct to the carrier to see if we can get you approved. Now, these days, pretty much everything, Tom and Mary, is non-medical. So what's nice about that is it's a simple, painless e-application. We submit it to the carrier, and most of them will come right back to us right on the spot with a yes or a no. Occasionally, depending on which carrier it is, it could be up to a week or so for them to come back to us with a yes or no. But regardless, there's no pressure today to make any final adjustments to coverage. Notice I didn't say decisions. I'm being very specific in my language. I'm keeping it just cryptic enough to where I can take them down the lane I want to take them down, but I don't want to say anything that's either not true or is going to plant a seed that I don't want to have to root up as a weed later. Okay. So I'll say, again, getting back to that, I'll say, today there's no pressure to make any final adjustments to coverage today. Okay, so let me explain what I mean by that. Because in the state of Oklahoma, at that point, after we've submitted the application, we've gotten you an approval for coverage, it's going to start something called a 30-day clock or a free look period. And what's really cool about that, Tom and Mary, is that gives you as homeowners the right to actually have an entire month to sit with that policy. So you can actually read through it. And during that time, you can make adjustments to coverage. So to give you an example of what that may look like, maybe you guys are sitting around talking about it and you're thinking about it and you're praying about it and you're looking at the budget or any of the things that you do to make a decision in your home. And let's say you call me back in a couple of weeks and you say, hey, you know what, Jacob, I think we sold ourselves short. I think we'd like to adjust the coverage up to that one that had some extra features that's a little bit more. Not a problem. We can adjust it up. Maybe you need to go the other way, right? So you call me up and you say, hey, Jacob, listen, you know what? I think we bit off more than we could chew. We really need to adjust the coverage down so that way we can fit the budget better. Not a problem. We can adjust it down. So Tom and Mary, we can adjust up, down. We can go left, right. We can do a backflip inside of this. Whatever we need to do so that whatever you have in place at the end of that 30 days is definitely something that Tom and Mary is very comfortable with. Does that make sense? Yes. Okay. Now, just so that I'm not throwing you a curveball later on in this process, I want to be very clear with you what the process looks like in order to get a pre-approval or an actual approval with these carriers. Now, I'm sure you've dealt with your other insurance carriers before too, like your auto insurance or homeowners and things like that. They're going to ask for some very sensitive pieces of information during this process, okay? For one, they're going to want to know proof of citizenship, right? Because if you're a U.S. homeowner, you're going to need U.S. Mortgage protection insurance. So they want to know they're going to want to know proof of citizenship. They're also not going to do a medical check, but we are going to look at medical background. All that's attached to your social. And of course, ultimately later on, if you do get an approval, they're going to want to know how you want to pay for this bad boy, right? So whether it's checking or savings, because you can't use your neighbor's checking account to pay for your mortgage protection. Does that make sense? Yes. Okay, great. Is any of that going to be a problem for you guys? And then 9 times out of 10, they'll tell me, tell me no. If there's a problem, what am I doing? I'm preventing an objection, and I'm also going to not waste my time, right? Because I'm letting them know that I'm here to solve the problem and do business, and that is the track that I'm laying. So I'll say, is that going to be a problem? And they'll say, nope, I think we're good. Okay, fantastic. Now let's jump into it and see what we come up with. Okay. And then I jump right into the financial inventory. So at the top, I'll start out, hey, was this a new purchase or was this oh, by the way, if I'm doing mortgage protection, I'm in the home. I've printed off, if I'm working a mortgage protection mailer, then I've actually printed off the mailer and I have it with me. And I actually show that to them during this time too, to just double check everything. And it's also a credibility piece along with my insurance license, because they actually see the mailer that they filled out right then and there in their handwriting. So instant credibility, right? If I'm in a virtual appointment, I just read it off over the phone because I'm their eyes and their ears if I'm on the phone. Of course, if I'm on Zoom, I share my screen because I have the power of visual at that point, just like I'm in a home. But anyway, so I'll go through that information. I'll say, all right, just to make sure I got this right. It says here that I got your date of birth, Tom, is 10/21/81. I've got your date of birth, Mary, is 10/25/82. Yes. Okay. The address we're looking at covering is 123 Main Street in Oakland, blah, 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 Okmulgee. They're like, yes. Okay. And I'll say, and it looks like the loan amount here that we're looking at covering is for 150,000. Is that correct? Yes. Awesome. Was this a new purchase or was this a refi? It's a new purchase. Okay, great. I'm assuming it's a 30-year note, or is it shorter? No, it's 30 years. Okay, great. Are you guys making any extra payments on this note or have any plans on trying to pay this house off early? Yeah, actually, we make an extra couple $100 a month payment on it. Okay, fantastic. Now, what is so the house is 150,000. Do you guys have any equity in it yet? Yeah, we got about 20,000. We put a little bit down, used a VA loan, but not much. Okay, great. $20,000 in equity. Now, are you both on the loan and the title? I'm on the loan. She's only on, and we're both on the title. Great. Okay, so you did use a VA loan? Yes, I did. All right. So the VA loan wouldn't let her on it? Yeah. All right. Gotcha. Okay. Now, do you guys have a living trust in place? No, we don't. Not yet. Okay. Gotcha. And what is your monthly payment with taxes and insurance included? It's $1,000 a month. Okay, perfect. Thanks. And I'm writing all this stuff down, guys. I'm doing this off of memory because I've done it so much, but it's on your financial inventory. So you don't have to memorize it. It's all right there. Just get really good at filling out the financial inventory. If you don't get really good at filling out the financial inventory, then you're like a crappy doctor that's not asking the proper questions to their client, to their patient, in order to make a proper diagnosis. I take this deadly serious. This is the largest asset of their life. This is also, we're talking about protecting their life here, right? This is a serious business. So I'm going to ask very serious questions so I can get it right. Okay. And so, so I'll ask about the vitals on the property. And then the next thing is I'll jump into them and I'll say, okay, great. So it looks like, Tom, you're 40. Is that right? Almost 41. Yep. Okay. And what do you do for work, Tom? I work for the city. Great. How much do you bring home a month? About 3,000. Okay, perfect. 3,000. Gotcha. Are you a smoker or not? I'm a non-smoker. Okay, great. By the way, do you have any life insurance on you now, either through work or private? Yeah, I've got some through work. Okay. You don't have any private? No, I don't. Okay, fantastic. Hey, Tom, I always tell people, all my clients, load up on work insurance. It's great because it's easy and it's dirt cheap. Here's the problem with work insurance is that once you stop working there, it stops too. You know that? Yeah, actually, I've heard that. Yeah, so you can't count on it. It's just a bonus. We get that. We need something private that you and Mary can control. Make sense? Yes. All right. You guys see what I'm doing here? I'm finding the holes in their game. I'm setting the stage. I'm making sure that any other objection that might come up later, I'm preventing it, right? Prevention. And then the next thing I'll ask him is, all right, Tom, do you have anything that acts like life insurance that might offset the cost of this mortgage, like 401k or IRA, significant savings, anything like that? Well, I got a 401k at work. Okay, great. How much do you have in it? I think somewhere around 75,000 at this point. Okay, perfect. Thanks. All right, Mary, do you work? No, I stay at home with the kids. Okay, homemaker. Bring any income at all? Nope, I don't. All right. Are you a smoker or non? I'm a non-smoker. Okay.
Hey guys, Dash, I owe you a sincere apology, period. I just submitted my numbers
do me a favor
for
and
last
mute out,
week,
Lori.
period. So sorry about that, period. I had.
All right, thanks. And then and so then I'll go through Mary and I'll say, okay, Mary, any life insurance on Mary? No, I got no private insurance on her. I've got a little bit through work on her. Okay, great, Tom. So I'm assuming stay-at-home mom. How many kids you guys have? Oh, we got 2 kids. Great. How old? Oh, 9 and 12. Perfect. Girls, boys, anything like that? Or anything like that. What do you have? I have 2 boys. Great. I got 2 boys too. I got 9, 7, and I got a 1-year-old baby girl. Again, building rapport the whole time, right? I've got my little things that I connect with. You figure out what you connect with on. That's organic for me because I'm a family man. I'm proud of that. So it's natural for me to talk about that. I'm not going to spend a ton of time on it, but I am building, some relationship with them as I'm going, right? But I'm staying on point. I'm doing that simultaneously while I'm filling out the actual financial inventory because I don't want to waste time, right? And so then I'll get through it, have that, and I'll say, okay, guys, like I said before, these are non-medical, but they're still going to look at some basic medical background to make their decisions. So, Tom, are you taking medications for any medical issues? Yeah, actually, I'm on high blood pressure. Okay, 1 med, 2, 3, what? Lisinopril? Yeah, it's lisinopril, just high blood pressure med. Okay, how long have you been on that? A few years. Okay, great. Well, Mary, you're gonna need to stop stressing Tom out, right? And they'll normally chuckle, laugh, and say, yeah. And okay, anything else? No, that's it. Actually, I'm healthy. Okay, anything serious in the past? Any cancers? Any serious surgeries, hospitalizations, anything like that? I had COVID 2 years ago. Okay, great. How long were you in the hospital? I was there for 48 hours. Okay, but everything's good since then. Yeah. All right. And then so from there, I got everything on there, and I'll say, oh, Tom, by the way, what's your height and weight? I'm 6 foot tall, 180. Okay, perfect. Mary, how about you? No meds at all. No issues at all. Okay, great. Any issues in the past? No. How about when you were pregnant? Any gestational diabetes, high blood pressure, anything like that? Yeah, actually, I did have gestational diabetes for a season. Okay, great. How old were you when that happened? I was 35. Okay, cool. Metformin? Yes. All right. And what's your height and weight? 5'5", 140. Perfect. All right. So now I've got, everything written down that I can on that. And then the next stage is now I'm setting the stage. So I'm going to say, okay, Tom, Mary, I've got a pretty good idea of what direction I'm going to take you in. But I'm actually going to do a pre-check here real quick. That's going to give me an idea of what programs and carriers will really be available for you at this point. So we're just going to do a quick pre-check. And basically all that does is just look at some health history, make sure that there's nothing crazy on there. And again, that'll just give me an idea of what's available to you. So that way I can go over some options. Okay. Sound like a plan? Great. All right. And then instantly I'm pulling up the Americo app. I've probably already had it up. I'm going to punch in some information. I'm going to gather their social. I'm going to do whatever I need to do to get that first pre-check. And some of you might be going like, whoa, I haven't even given them options yet. Yeah, because what I'm doing is I want to see if I at this point, I have a pretty good idea of what direction I'm taking them in. I'm going to go for a CBO 100 with Americo to protect the house is what makes sense in this situation. So what I'm doing is I'm going to do a pre-check to make sure that they're probably going to qualify for this product so that I don't get a curveball later on where I sell them on it and all of a sudden they can't qualify for it. So that's one of the unique advantages of using Americo. If you're not using Americo, use Americo. You should be using Americo 90% of the time. The only time we don't use Americo is if it just flat out does not make sense at all, which is not very often. And Americo's got a pre-check version. So anyway, right then and there, I'll go through. If I'm in front of them, I'll turn it around, have them sign real quick, hit initiate underwriting to do the pre-check. If they're over the phone, I'll have them, it'll email them over the 6-digit authorization code. I'll have them read it right back off to me. And then boom, right then and there, I'm going to hit initiate underwriting. And within a few minutes, they're going to come right back to me, let me know, yes, this person's passed the pre-check for this product or they haven't. So let's say to keep it easy that they did in this instance. So boom, right then and there, there's two things that have happened. One, I know they can qualify for this product, so I'm not going to have to pivot later. And two, guess what? They're already giving me their social. They're already going through it. So guess what? They're already buying. I'm bringing them through. I am assuming the sale. I have absolute posture that this is happening. I'm there to solve a problem. If you have booked the appointment, I'm sitting in front of you. We've gotten this far. You're getting something, right? And we are solving a problem today. And so then the next thing I would do is I would pull up my quoting tool. You guys are free to use, if you've set your tech up ahead of time. By the way, that's another big nugget is before you ever go into the home, make sure that you have your tech set up, meaning that you already have all of your e-apps bookmarked. You have your quoting tools bookmarked, all that stuff readily accessible. So you're not having to scramble around your tech and take extra time, right? So right then and there, I'm going to pull up my quoting tool. Now, I use insurancetoolkits.com. I pay an extra fee for that. I like it because for me, it has all the quoting tools in one spot for final expense and term. And so literally I can run the numbers, punch in the vitals on a client, and boom, run the numbers. And it literally shows me every single person I'm contracted and the prices on all of it. So that's I love that. Now, mind you, don't ever be dependent on tech, because tech's great when it works, but it doesn't always work. So occasionally, very, very rarely, there might be a number that's off, or it's not quite reading or pulling the data from a specific carrier or something like that, because this is a third-party company quoting tool where they have built a software that goes and connects with all the different carriers that we're contracted with, so that you can just go to a one-stop shop to quote. Now, I still wouldn't be dependent on that. I would have all of your other quoting tools bookmarked just in case that didn't work. And some people are old school. They don't want to use that. They're used to they don't want to pay the extra fee, the $30 a month, to have access to that. They just assume bookmark all of the major carriers and go use that. That's fine. If that's you, then that's you. But anyway, at that point, I'm pulling up either insurancetoolkits.com for me. If it's for you, maybe you're pulling up the Americo quoting tool. But I'm going to quote them 3 different options. And as a good rule of thumb, especially when you're new and you're not really sure what to quote, if for you, what I would be doing is I'd be taking a picture of the financial inventory. I would be sending it over to my mentor or whoever I'm working with in the home. I would be using the genies on Discord. I would also be using my peers. I would rely on that, get really active in the Facebook group and on Discord. So that way you can post in there, hey guys, this is my financial inventory of who I'm dealing with. This is what I'm thinking. Ready, go. What would you write? What do you think they qualify for? And what's awesome is you'll get feedback, man. You'll have a bunch of people respond back. Yep, Americo CBO 100. Boom. Okay, great. And that's how you guys learn. And that's how you also make sure that you can make sales while you're brand new. Because a lot of you guys, one of the biggest mistakes you'll make is you will drag your feet going out to get in the home because you feel like you have to know all the products first. Well, guess what? You're never going to go into a home, because we're independents and we have so many different carriers and so many different products that you can get confused on that. You're going to earn while you learn. 1 hour in the field is better than 20 in the classroom. Just go do it. So get really good at buying leads, setting appointments, getting in front of the prospect, building rapport, and filling out a financial inventory. If you get good at that, I promise you the rest will take care of itself as you go, with the help from the genies, your peers, and your mentors, okay, while you're in the house. And so now don't get dependent on that. That's not a crutch. Everybody needs to learn. If you're having to depend on your upline to help you on what to write, and you've done 100 appointments and you're still having to lean heavily on them, then you're not learning. Shame on you. You need to master your craft, take time, learn that stuff, write notes, look at underwriting guides. All that stuff will start to, you'll start to develop patterns. You'll realize there's only about a half a dozen patterns you're going to come up against. And you'll realize that for the most part, there's about a half a dozen products that you're going to be working with most of the time, right? So anyway, boom, back to running my numbers. But here's the formula. You want to show 3%, 5%, and 7% of the monthly household income in premium. Okay, so like if the household income is $4,000 a month, then I'm going to take 3% of 4,000, and I'm going to find option A, the lowest option, is going to be somewhere around 3% of their total monthly household income. Then their middle option is going to be around 5%, and then the top option is going to be 7%. That's a great rule of thumb. It's a great formula for you guys to be able to know as far as like how much should I show my prospect, my client. And you'll find, after I've done 1,000 appointments, if I went back and did the math, it always comes down to about 3, 5, 7%. Some, those 3 numbers are about what I'm showing them. Okay. If you go above that, you're either going to get, I need to think about it because it's too expensive and they get sticker shock, or if they do buy it, your chargebacks are probably going to go up because you're selling too much premium. And then when you get out of the house, they're going to have buyer's remorse. Now, I'm not telling you to be scared of selling high premium. Just you don't want to oversell, right? You don't want it to come back and be a boomerang to bite you in the butt. And you also don't want to undersell. I find that a lot of new agents, the biggest mistake they make at this point is that they don't have the posture and that they're afraid of price. And so they'll actually sell themselves short and ultimately sell the client short because they'll show too small in numbers. They'll show too small in coverage. and don't do that to your client or yourself, right? And so anyway, I'll basically run numbers on 3%, 5%, 7%, and then I'll turn and I'll say, okay, Tom, Mary, I got some options here. Let's figure out which one's going to be the best match for you. Okay. And again, at the end of the day, what this is all about is part of my fiduciary responsibility as your agent is to underwriters to make sure we find something that's affordable, because we do a long-term relationship as your underwriter. So I am going to be calling you back and meeting with you once a year, doing what we call a yearly review. That's where we check in and just make sure that you're still in the best position you could be in. I want to make sure that whatever we put in place today is sustainable long-term. Does that make sense? So that way, if the hot water heater goes out in 6 months from now, you're not having to make a decision between the hot water heater and your mortgage protection. Okay. And then I'll show them. I'll start at the top. I'll say, listen, the max recommendation that they make when I punch in your numbers is this one. The amount that they really think that you should go with, it would be optimal, is this option right here, B. And then the lowest or minimum that they would recommend in order for you not to be underinsured would be this one right here. So and then I'll explain, the products. I'll say, let's say I'm pitching a CBO 100. I'll say, Tom, Mary, this is, what's really cool is I got 3 options for you. But this option here is basically what I call the policy that always pays. So you know how your other insurances, every single month you pay it, and then if you don't use it, you don't get your money back? Yes. What's nice about this is no matter what, you're going to get your money. Okay. What do you mean by that? And so here's what's nice. If you die, it's going to pay the house off. If you get really sick or really hurt, it's also going to pay. But what's really neat is if you don't use the coverage at the end of the mortgage protection term, you're going to get every single dollar back in tax-free cash back. And they'll look at you like, what? Like, yeah. So it's a no-brainer. So you remember earlier how you were telling me you were spending an extra $100 to $200 a month to try to pay this house off early, right? Here's the problem. If you die early, then you're just going to give all that money back to the bank. Why don't we look at this like a savings account to pay the house off early? But if you get sick, hurt or die, then you've got coverage. Does that make sense? Yes. And then I'll show them, 3 options inside of that, right? So maybe full coverage is like 7%, right? Then I'll show them maybe a partial coverage or CBO 50, right, as option 2. And then I'll show, something as option 3. So again, I'm just, doing something that fits inside of that 3, 5, 7. And then I'll say, okay, great. So Tom, Mary, out of these 3, which one do you think would fit the best? And then I just shut up and then I let them answer. And you'd be amazed at how many times it'll be the top one when you don't think it will be. A lot of times it's the middle, and sometimes it's the smaller one. But if they choose right then and they say, yeah, I would think the middle, you got to sell, right? If at that point in time they balk at it and they say, well, we really need to talk about it, guys, that's not true. That is a smokescreen for you. You either didn't set the stage earlier in the presentation properly. You didn't find out intent early on. That's why I ask those tough questions early, so that they know that we're going to be doing something today, so that I don't get that I need to think about it, or the shopper. I'm not looking for shoppers, guys. I'm looking for buyers. Write that down. If it's a shopper or somebody that's not looking to get it today, it's not somebody that I can get to make a decision today. I'm going to discover that most of the time in the first 10 minutes, and I'm out the door and I'm on to the next one because I'm not wasting my time. Okay. You don't want to give numbers unless you know for a fact that there's the intent. Your cards that you're holding are the numbers. Okay. I'm not your quoting tool. I'm not, I'm just looking for a quote, or I'm shopping, or I'm doing this or that. I don't play that game. I'll say, okay, totally get that. But the good news is we're like the mall of insurance. Remember, I told you we're the #1 writer of mortgage protection insurance in the US. That's why we work with over 20 carriers. So if there's anything that's available for you, I'm doing the shopping for you right now today. That's a free service that we're doing for you. Let me do the work for you. So that way we can find the absolute best, for you, that's going to be the best option for you and Mary. So I totally get that. We're going to take advantage of that. Okay. And so I'll let them choose. And then of course, let's say maybe they balk and they say, no, and I'll say, listen, The good news is, like I said earlier, you don't have to make any final adjustments today. That's not what today's all about. The only decision we have to make today is whether or not we're going to apply for coverage or whether or not we're going to decline to apply for coverage. So remember, you have 30 days to make adjustments. So right now there's nothing to think about or discuss until we get that approval, because right now we don't even know if we can get you approved. Okay. So sometimes you have to, push on them a little bit or ask tough questions. But what I have found is that if you set the stage early and you did your job right, and you asked the right questions and you had the right assumptiveness, then you're going to get a lot less I need to think about it or anybody balking at the end, because you set the stage early and you've prevented objections, right? So let's say, for sake of time, that they say, oh, the middle one, that looks good to us. Okay, you sure? Yeah. So 6 months from now, hot water heater goes out. You guys aren't going to have to make a decision between this or that. No, we're good on that. Okay, great. Sounds like a plan. Grab your ID. Let's see if we can get you approved. Also, you're going to need to grab your checkbook, because I'm going to need your routing number and account number for whatever account you want this to come off of. Boom. I look down, basically don't even look up. I've already got their, app started in the pre-check. Now I can just go through and finish it. And then boom, right then and there, sold, done. Now, when I go to tie a sell up, whether this is over the phone or it's in front of somebody, at the very end, when it's all done, this is how I tie up sales. And by the way, this is how I've kept a lot of business on the books, and I've had a really good persistency rate. At the end of it, when it's all said and done, it's all sold, they're approved. I've got an instant approval, they're ready to go. Some of you maybe will leave behind or whatever. I've never been that organized. I just basically have them grab a notepad and a pen if they don't have one already. And I'll say, okay, great. Number one, Tom and Mary, I'm so awesome that I've been able to serve you today. I'm going to be your field underwriter, like I said, for the life of this file. So the neat thing is with us, you're never going to be in 1-800 overseas voicemail hell. You're always going to be able to get me if you need me. Okay. So write my number down, Tom, Mary, make sure you save that into the phone. Mary, if Tom ever, heaven forbid, happens, where he passes away and you need to file a claim, if you're distraught and you don't know what's going on, or maybe you're confused, if you need help with that, feel free to reach out to me. I'd be more than happy to help. But here's my number, save it in, and you can just put me down as the insurance guy. So here's what you also need to know. Well, not only are we the number one writer of mortgage protection insurance in the United States, but we also specialize in traditional life insurance, final expense, and retirement income protection. So if you ever need home help in any of those issues, I have to have certifications and all that. It's a free service to you of no charge. You might as well take advantage of that. Please give me a call, shoot me a text if you ever need any help in any of that. Okay. All right. Awesome. Now, just to recap what we did today, the name of your carrier is Americo. They're the largest privately held mortgage protection insurance company, life insurance company in the U.S. They're A-rated. They've been around 100 years. The same company that owns Americo owns Home Depot. They're phenomenal. They're great. They're my favorite company to work with. They're so easy to work with. Now, they're going to actually mail you your policy. You'll get that within the next week or so. Make sure that you put that in your important documents. You can review it. If you have any questions, let me know. My assistant, Connie, is going to reach out to you within about 3 or 4 weeks. She's going to follow up just to check in with you guys, make sure you don't have any additional questions. There's no adjustments or anything that you guys need. And then, like I said, either myself or somebody on my staff is going to reach out once a year, and we're going to do that annual review. That's just where we check in with you to make sure that the I's are dotted and the T's are still crossed, and that you're still in the best position that you could possibly be in, and we don't catch anything we didn't catch the first time. Does that make sense? Okay, great. Do you guys have any other questions for me today at all? No, I don't. Hey, it was my pleasure serving you guys. Thank you so much. I'm glad we got you the peace of mind. Have an amazing day. Hang up the phone, or I'm out and I'm on to the next one. Okay. So that's how I tee up a mortgage protection appointment. I know we're getting to the end of an hour, and you guys got robbed a little bit today because I was a little late, but your final expense is basically the same. It's just, we're not using mortgage protection terms. It's really simple. We're just using, hey, most of the time somebody's looking at doing this because they either want to leave extra behind or they don't want to leave a burden. Which one is that for you? If you just follow the financial inventory sheet of whatever type of appointment you're on, you'll be okay. All right. We're not going to leave you guys flying blind. The final expense asks the right key questions and asks them early. So that way it sets the stage for you very well. And then, of course, the mortgage protection financial inventory does that as well, too. But I think that's pretty good. So let me open it up. Any questions the last couple of minutes on that that I can help you guys on while we've got a few more minutes? No, you guys can unmute if you need to.
Hey, Jacob, I have a question for you.
Hey, Vicky, what's going on?
How are you?
Good.
Good. So what if when you're saying you don't have to worry about making any decisions today, blah, 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 but yet you're asking for their billing information, routing number and stuff. So the payment comes out fairly quickly. How do you offset that objection? Like, well, why do you need that? Because it's going to come out right now and we're trying to decide and blah, blah, blah.
Well, I make it very clear that they are going to get started. So when I say earlier in the conversation, when I set the stage, if you notice what verbiage I'm using, I'm saying, hey, listen, there's no pressure today to make any final adjustments to coverage. So we can go up, we can go down, we can switch programs, do whatever we need to do inside of that 30 days. You notice I didn't say anything about not applying today. I didn't say anything about not getting coverage today. I'm saying that there's no final adjustments or anything needed like that. So setting the stage with expectation and doing the pre-check and everything that I did earlier in the presentation eliminates that objection 90% of the time. I still get the objection sometimes at the end. Hey, we really just want to think about it. And I'll push on them and I'll say, hey, listen, I totally get that. Like I said, the only decision that we really need to make today is whether or not we're going to apply for coverage or not. If you don't apply, I don't want you to do anything that you're not comfortable with. That's totally fine. But if you don't apply for coverage, you're going to sign the bottom of this saying I decline coverage. That just protects me in case you die tomorrow. That way they know that I did my job. And then what we'll do is I'll close the file out and that's totally fine. We'll move on. And I'll do the takeaway on them because if I walk out that door or get off the phone and they don't put in an application, you're not getting that sale. That's just a smoke screen for I'm not interested or whatever. And I'd rather get a quick no than a slow maybe any day of the week. So when I say, listen, we're going to make that decision on whether or not we're going to apply or not, and then you have 30 days to make those adjustments. If I can't get them to bite in that, then I'm done. I'm closing out the file and we're moving on. I'll make them sign it right there in the house. And or I'll do the takeaway. And a lot of times you'll get them to go, all right, well, yeah, we'll at least apply it. Because I'm just getting them to move. I'm not trying to be a pushy salesperson, but guys, in this scenario, Tom and Mary, dude, they don't have any real insurance. It's got work insurance. They're underinsured. I'm going to leave this person in the law of diminishing intent. If I walk out this door, this guy's put it off this long, he's not going to ever do it. So if I walk out this door and I don't get him to at least commit to put an application in to where they're actually moving, they're never going to do it. So anyway, hopefully that answers the question, but that's in my experience how that's worked for me.
Yeah, thank you. I appreciate that.
Yep. Any other questions, guys? No, we good to go? Okay. So now the only other thing that I would recommend is for those of you guys that are doing mortgage is 60% of the scenarios, like I gave you an awesome prospect scenario, right? 2 healthy 40-year-olds that can qualify for CBA 100. That's a really good pitch. The reality of it is 60%, I would say easy or more of your sales in this business are going to be made to seniors. And if you're working mortgage, you're going to have to learn how to pitch senior mortgage. And what I mean by senior mortgage is you realize that they're not young and healthy enough to qualify for a term product to do a full payoff. So at that point, you're going to need to pivot and you're going to need to know how to pitch senior mortgage. So I'm going to recap. I'm going to cap that with you guys real quick, and then we'll let you go. Okay. So going back to that same scenario, let's say Tom and Mary are not healthy 40-year-olds. Let's say they're fairly healthy 60-year-olds, right? And they refinance their house because of the low rates or whatever. Sorry, I live on a farm and I've got animals. So if you guys hear them in the background, it is what it is. So, but in that scenario, let's say Tom and Mary, I sit down with them and they refinance their house and it's worth 200,000. They owe 150. And they're empty nesters, right? They got nobody home. They're both retired. They're on Social Security and a small pension. And you realize looking at it that it's probably not going to be in their budget for a full payoff. And let's say that he just doesn't qualify. He'll qualify for Americo Eagle Premier whole life, final expense, no problem. But he's iffy, probably not healthy enough to qualify for the term. So you're not going to take that chance. So what I'm going to do is and by the way, that's another key. Whatever angle you're going to go with, you need to ride that angle out and just like, that's your story, stick to it. Don't try to pivot your angle in the middle of it. Cause if you confuse your client, then you are going to get, I need to think about it, because a confused mind does nothing. So you need to make sure you do not confuse them. Right. So senior mortgage is really simple. So I sit down and I say, okay, Tom, Mary, let's say I've gone through the financial inventory and now I'm about to show them their options. So I'll say, all right, well, Tom, Mary, I got a pretty good idea what direction I'm going to take you in. But let me just ask you this, Tom, when you mailed this in and, filled this form out, and mailed it in, what was the thought process? If, something happened to you, or Mary wanted to make sure that, the house didn't end up going back to the bank. Yeah, exactly right. Okay. Well, forget insurance for a second here. Let me just ask you guys, let's think this through together. What is really the plan on this home anyway? Mary, statistically speaking, Tom dies first because he's the guy and we're stupid and we die early. That's just what happens. They'll normally laugh, but it's the truth, right? I'll say, Mary, let's say Tom passed away tomorrow. What is the plan with this house? I mean, are you going to keep it, this big old house, on your own, or are you going to sell it and downsize and move on? What would you do? Oh, this house is too big for me. I would sell it and I would move closer to my kids and my grandkids. Oh, okay, perfect. Ding, ding, ding. All I'm doing is cementing that. Let's say they go the other way though. Let's say she's emotional and she's not thinking it through. And she says, no, I would try to keep it. But I'm looking at this piece of paper and they can barely afford the house right now on 2 Social Security payments. Tom's got the much bigger Social Security than she does. He dies, she's going to get the bigger of the 2 Social Security payments. Her Social Security goes away. So if they don't, then before I even get into their options, I'm going to sell them on a story and an angle to get them to think the way that I need them to think in order to accept the product that I'm selling them. And by the way, it is, and I'm not being dishonest. It's the truth. I'm going to get them to come to grips with reality. I need to bring them back down to earth. So I'll say, okay, well, Mary, listen, before I even get into options, let's just be clear here. So I do about 1,000 cases of this a year, and I would say the overwhelming majority are seniors. And you guys do qualify for something. You qualify for what's called a senior mortgage plan, and I'll cover that here in a second. But let me just tell you, in our experience, what we've seen. Easily the overwhelming majority of the time when a senior passes away, the remaining senior, normally that house gets sold within the first couple of years afterwards. And let me explain to you why. I know you love it. How long have you been here? Oh, I've been here 30 years. Oh, dude, you got memories, right? You raised your kids over there. You remember them opening up Christmas presents and turkey. I get that. You got all these, there's a lot of emotion tied to this house, right? Yeah, we've been here forever. We built it 30 years ago. Okay. Well, listen, let's think this through. You guys are in your 60s. Let's say that Tom passed away. It's 10 years from now, and you guys are in your 70s. I want you to think about this. You no longer have Tom contributing to the household, not just his income. You've lost half of your household income. Poof, gone. Dies with Tom. But you've also lost the contribution of the spouse. Tom's no longer going to be here in order to help you mow the lawn or to change the light bulbs or to keep this place up. And do you really think that looking out in your 70s or 80s, you're really going to want to, keep this big old house with half the income and half the effort? Where did you say your kids live? Oh, they live a few hours away. I mean, at the end of the day, during your golden years, are you really going to want to fight that over the emotional tied to a house? Or do you think logic is going to take over at one point? You're going to realize, hey, you know what? I should probably sell the house, pull the equity out, replace the lost income of my spouse, downsize, make it easier on me in my golden years, right? Because it doesn't get easier when you get older. It gets harder, right? And then that way I can get close because it's all about the kids and the grandkids, right? Do you guys see what I'm doing right there? I'm having a real life conversation with them about what she's going to deal with because, guys, that is what they're going to deal with 9 times out of 10. So as soon as I get them on the page that this house is probably going to get sold, then I can jump right into what's critical time period or senior mortgage. So I'll say, listen, guys, so senior mortgage, or what we call a critical time period plan, is designed to be perfect for you guys. So let me explain to you what it's designed to do. Mary, we find that somewhere between a year, year and a half, 2 years after a spouse passes away is normally the critical time that the remaining spouse needs, where they're not worried about a mortgage payment. So they're not having to rush from the real estate office, the funeral home, to the real estate office. So what this does is it's designed to affordably buy you time, because let's face it, you guys are on a fixed income. And the reality of it is all mortgage protection is regulated underneath the life umbrella, meaning it's really built on one of three types of life chassis. It's either built on a universal term or a whole chassis. Well, when you're sitting down with two seniors on a fixed income, you guys have a 30-year mortgage here, Mary. So, if you live to see all this through, you're going to be in your 90s when it's paid off. So is it safe to say that there's a good chance you guys aren't even going to live to pay this house off? Oh yeah. We already know we're not ever going to see this house get paid off. Okay. Well, what we don't want to do is put you in a coverage that's going to be able to cancel you because of age or health. We need something that's going to lock you in at a 60-year-old's rate, something that you can afford in retirement, that is never going to cancel you, that you can keep as long as you need to, and something that's not going to ever raise the rates on you so that it doesn't price you out. Okay. So to do that, we really need something built on a whole chassis. It's going to be the best solution for you guys. Okay. So senior mortgage protection is designed so that when Tom passes away, it's going to kick in and it's going to cover a certain amount of mortgage payments for you. Again, a year and a half, 2 years, because follow along with me. This is what you're going to probably be up against. If Tom died tomorrow, the first thing you're going to want to do is not make any financial decisions because your head's not screwed on straight, right? Right. Yeah. Because at that point, you're going to need to get through the funeral. You guys, how long you been married? 40 years, right? I mean, if I lost my best friend, that's going to take my breath away. I don't want to think about any of this stuff. And so I'm going to need to get through the funeral. And it's normally takes a few months just to breathe again, right? And then you're going to have to start closing this chapter of your life out with Tom, right? You're going to need to file with the Social Security Administration to get that fixed. That's the government. That sure as hell doesn't happen fast. So that's normally going to take a few months to get fixed. If you are going to sell this place, you need to start going through his stuff. You need to start going through, hey, do I keep this? Is this a family heirloom? Does it go to the kids? Does it go to the grandkids? Right? And that's not something that you want to be rushed in doing. You want to be able to take the time to do that, the right way. And then if you are going to list the house, you're going to need time to clean it up, curb appeal. You need to get listed, sold, moved out. This is easily going to take you somewhere between 1 and 2 years. Wouldn't you agree? Absolutely. So what this is going to do is buy you time. So that way you don't have to worry about making a mortgage payment during that time. Okay. Does that make sense? And then basically what I would do is I would show them three options. I'd show them a year and a half, 3 years based on 5%, again, 3%, 5%, 7% of their mortgage, of their monthly income, right? And how many mortgage payments. And it's really simple. You might be thinking, well, how's that working? I just look at the monthly payment and I multiply it times 12, 18, 24. And that's the face value of whatever whole life insurance plan that I need to quote for them. But instead of telling them that it's a $24,000 whole life plan, I'm using mortgage terms, right? And so at that point, I'll say, hey, listen, these are your three options. Would you like to cover a year's worth of mortgage payments, 18 months, or 2 years? Tom, Mary, how much time do you think Mary would need if you kick the bucket tomorrow in order for her to make this smooth transition without having to stress? You know what? I want her to have all 2 years. Yeah, I think that's a great idea. Perfect. Let's go ahead and grab your ID and let's see if we can get you approved. And so that's how you sell senior mortgage, guys. Or let's say it's another scenario where they're like, you're dealing with one senior and they've got kids. And so they're like, well, I got 4 kids. So if I die, the houses go to the kids. Perfect. This is a transfer of assets plan in which we're going to use this as critical time. So guys, you need to get really good at pitching that senior mortgage, because when they think of it that way, then it makes a lot of sense. What you don't want to do is to sit down and think that, a 70-year-old thinks that they're going to get a full payoff on a $250,000 loan for $20 a month. And dude, they're not going to qualify health wise. And even if they could, they're not going to be able to probably afford it because they're on a fixed income. So this brings them down to earth. And it does it in an affordable way in which that they're going to qualify, because it's a lot easier to qualify for a final expense product than as a term product. And then that way you fit their needs and that you can get them approved and you can feel good because they got served, and you feel good because that you served them, and that it's going to process and get paid out, and you can move on to the next client. So anyway, guys, I'm done. Like I said, we went over a little bit today. Thanks for your patience. Any questions about that before we close it out? No, we good? Going once, going twice? All right. Well, listen, guys, thank you so much for joining. These in-home clinics are money. For those of you that are brand new, you're seasoned vets, you're always going to learn something. I found that it always takes about a half a dozen of these events to really change your life in this business. The only problem is you don't know which half a dozen they are. So you just have to keep showing up religiously over and over and over again, like going to the gym. And, eventually, you get a little bit off of this, you'll go apply it, you'll come back, you'll watch another one, you'll fix it, you'll do mid-course corrections. And then before you know it, you'll have a rhythm that works for you. You'll be a master, you'll master your craft, and you guys will be out there, writing 20, 30, 40K a month, Hall of Fame, or wherever you want to take this thing, making an amazing living and building a big agency. So thank you guys so much for your time. Have an amazing day.